Ladies and gentlemen, good day and welcome to Tanla Platforms Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ritu Mehta from Tanla Platforms Limited. Thank you, and over to you.
Hello everyone, I'm Ritu Mehta and I lead Investor Relations for Tanla Platforms. On behalf of everyone at Tanla, I would like you to welcome to our earnings call Q1. Joining with us today are Uday Reddy, our Founder, Chairman and CEO, Deepak Goyal, Executive Director and Chief Business Officer, and Arvind Vishwanathan, our CFO. Uday Reddy, our Founder, Chairman and CEO, will share his perspectives of business imperatives and strategic progress made by Tanla. After his opening remarks, we'll be happy to engage with the participants and address their questions. Before I hand it over to Uday, let me draw your attention to the fact that today's discussion may feature statements that are forward-looking in nature. All statements other than statement of historical fact could be deemed forward-looking in nature. Such statements are inherently subject to risk and uncertainty, some of which cannot be predicted or quantified. A detailed disclosure in this regard is mentioned in the results presentation that is uploaded on our website. Now over to Uday.
Yeah, thanks Ritu. Good afternoon everyone. Very warm welcome to our Q1 earnings call. I hope you had a chance to see our results and I will specifically cover two areas in this call before we go to Q&A. The first one is I will talk about the Q1 performance, and I also would like to give a quick update on the areas of strategic focus. After many quarters of consistent performance, we have had operational headwind in Q1. We delivered 28% revenue growth in seasonally weak quarter, but we faced headwinds which affected our profitability. We had internal and external factors affecting us, and let me give you a view of the same. We had some challenges with our Carex platform. We have seen significant growth over the past few years in terms of volumes, and we needed to upgrade our current infrastructure to meet the scale requirements and deliver top-notch customer experience. This caused some short-term impact on our EBITDA. However, I firmly believe this was the right thing to do from a longer-term perspective, and we don't see any EBITDA impact due to this going forward. The second aspect was unfavorable exchange movement between euro and dollar, and this affected our EBITDA by almost 1%. We also had some market disruption with some customer, a specific impact affecting our profitability in Q1. In total, we had a cumulative impact on EBITDA of almost around 4.5% due to these factors. We expect that most of the impact is one-off, and we should get back to operating at the levels around 20% in the next 2 quarters. On the overall market, I'm quite excited about the potential here. We continue to grow our existing clients and add market new clients. Our platform business grew around 23% year on year and operated at 95% plus gross margins. We are making significant progress on our Wisely journey. We have deployed our AI and ML based firewall with the VIL, and it went live in Q1, and it is expected to scale in Q2. We also had launched Wisely Insights. I have personally taken these insights and discussed this with the global tech giants, and I see tremendous traction with them, which should translate to more business for us in the coming quarters. We have launched Truecaller towards the end of Q1. Our beta launch was very successful, and we now see a lot of traction in Q2. We are seeing a lot of interest from enterprise customers and very excited by our potential here. We also announced our exclusive partnership with Core.ai, a leading conversation platform around Wisely. So as you can see, multiple components of our strategy are coming together well, and we have built a solid foundation, and I'm confident we will deliver profitable growth in the coming quarters. Now, I would like to hand over to Ritu to carry a Q&A. Yeah?
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Aniket Pandey from ICICI Securities. Please go ahead.
Hi. Thank you for the opportunity. I just wanted to get some clarity on margins actually. Apart from the currency headwinds, sir, are you seeing increased pricing cuts in the industry due to increased competitive intensity in the industry in last 2-3 quarters? Secondly, sir, in your PPT, you have mentioned headwinds such as market disruption and modernization also. Can we know in detail exactly what are you referring to in that?
Sure. So, you have 2 questions there, right? One in terms of the overall pricing environment in the market. I will ask Deepak to cover that. And then then we will come to your second question on this entire platform modernization piece, and we can cover that. So, Deepak.
Thank you.
Deepak, I think you're on mute. Request you to unmute and proceed.
Hi, good evening, everyone. Yes, Deepak here. Yes, you asked a question about pricing environment in last 2-3 quarters. So I would say pricing environment per se is overall stable. We overall we don't see any pricing competition as such. Okay, though it's though it's always a little bit of price erosions are there, but this is very normal for our industry. But as Uday mentioned, we have seen in one of our large customers, where we were getting significant volumes, and there we have seen pricing being quoted much lower, which didn't make sense to us to work on those prices, and we decided to scale down our volumes with that customer. And while the transition was taking place to the other providers, we had to serve at those prices in Q1, and hence we saw our margins going down. But and that impact may be there for some part in Q2 as well. But going forward, I don't see any issue.
Second question.
Thank you.
Thank you. The next question is on the line of Balaji Subramanian from IIFL. Please go ahead.
Thanks for taking my question. So my first question would be on this pricing pressure aspect. So we did see that one large customer was offered lower prices by one of your competitors. And is this one-off in nature, or is there a risk that the same competitor, which I believe is a large telco with a fairly strong balance sheet and focusing aggressively on the enterprise segment, is there a risk that it offers similar pricing in other accounts, and we will probably face incremental pressure even if this particular customer sees volume ramp down? That is number one. Number two is with the scale down in volumes with the first customer that you mentioned, what should one think about your as your revenue growth for going forward? Because we have been seeing that in the last 2-3 quarters, the revenues have been largely range bound between 800 and 900 crores. And the YOY numbers still look good because of the tailwind from the ILD SMS rate increase. But now going into 2Q, that will anniversarize and the YOY comms might get difficult. That's from me.
Deepak, would you want to address that?
Yeah, sure. Hi, Balaji. So, I would like to say that, we have seen, multiple bids after this particular bid, okay, and I have not seen anything like that. I would say this is a one-off where, our competitor just decided to quote whatever they quoted. And I'm sure they must have realized, what they've done, because I've not seen anything happening afterwards. Because in Q1, it generally after 2 or 3 years, there are so many bids get due from certain amount of customers. So I don't see any issue going forward. As far as our revenue is concerned, definitely, when there is some sort of a price, erosion, then, it impacts the revenues. But we have been winning a lot of new businesses, a lot of new customers, and you would see, a growth in revenues in the coming quarters.
Okay, Deepak, that is helpful. So let me put the first question the other way. So if I were the telco, which is wreaking havoc, and I have a fairly large enterprise business where CPaaS is one of the key elements, but I also have other offerings starting from connectivity, cloud, security, etc. So clearly there is some bit of flexibility on the CPaaS front because I can cross-subsidize some of this with some of my other offerings. So, what do you think would, prevent such a large company from kind of, going a little low on the competitive front going forward? Because basically what I'm asking is, what gives you the comfort that, they won't attempt something like this with more accounts?
See, sorry.
Deepak, go ahead.
See, first of all, I cannot comment, about their thought process. Okay, but at the same time, as I said, that there are, more bids have happened after that, and we have not seen something like this. I would say that this is one-off because the kind of prices were quoted, those are not viable for anybody to do that. And it has nothing to do with what other offerings they have, because we also have other offerings, but we don't quote such prices. I mean, and just to tell you, from the same account, we have won a very big WhatsApp business as well. So we feel that in the coming quarters, we would be back with the kind of revenues or margins we are making. So we are very confident about it.
Okay, thank you, Deepak. This is helpful, and all the best.
Thank you.
Thank you. The next question is from the line of Ashish Rathi from Lucky Investments. Please go ahead.
Yeah, hi. Thanks for the opportunity. In the media articles, we have read about this NASSCOM making a case to RBI to change the regulation to include in-app notifications instead of SMS. Your understanding and take on the same, please, as it is a concern for us investors in terms of overall sustainability and of our existing business model. Would love to get your perspective on this, please.
Yeah, Ashish, Uday here. So this in-app message has been around for quite some time, right? This is not new technology which is available now, right? It has been there for quite some time. That's number one. Number two, it was never a successful model. In fact, if I'm allowed to name, all the tech giants have got the app sitting on for example, all the tech giants, their app sitting on your mobile phone. They can afford to use their in-app messaging, but still they use SMS and other channels to reach out to their customers, because in-app messaging is not reliable. One should have data all the time for somebody to receive the messaging in terms of in-app. That's number one. Number two is it is not reliable because SMS can deliver in less than 4 seconds from the time it leaves the enterprise to the handset. But in terms of the in-app, we don't know. It may take a bit of time.
Yeah.
Okay. So we don't see. I don't see any challenge there. Okay. And in fact, tech giants tried their best to use their apps to reach out to their consumers in India and globally, and they saw the result, and they started using the SMS and other channels. So I think it is blown out of proportion, and we are quite indifferent to this article.
Sure. The whole case in point they are making is mostly about the pricing, where at least the media article suggests that it's 0.12 rupees per message versus in-app notification impact at 0.001. So could there be a case of a downward pressure on the revenues or the pricing that we have, and that is something what the previous participant also kind of indicated towards. What is your sense on the pricing at the company level in terms of SMS going forward? Is it something that is sustainable over a longer period of time, or is something that could possibly go down as a business?
Ashish, so we are in this business for more than 20 years, and so SMS is a very, very secure and more reliable as a channel, and it will remain in this space. In fact, as we speak, the volumes are going through the roof in the last couple of years. So I don't see any challenge in terms of the channel per se. That's number one. In terms of price, Deepak has already explained about the price. So it is we don't see any challenge there. Everybody has to service their customer. Everybody has to earn their margins. The couple of customers, for some reasons best known to them, may try to disrupt for one or two customers, but we don't see any challenge with any other customers, whether in terms of the price or in terms of anything other than that. So we don't see any challenge, absolutely no challenge at all. We will definitely grow. Our volumes are growing. We are growing much faster than industry, so we don't see any challenge.
Thank you. And just the second question is on, can you give us an indication of what percentage of revenues presently come for us from SMS for banks and fintechs combined?
I'm afraid we cannot share. We have a bit of NDA with this on the banks, but yeah, sorry, 30%.
Roughly around 30%. We're not calling out the exact numbers, but that's the largest vertical for us. Yeah, so that is where it is. But the other point I would just make, Ashish, is that probably SMS is still one of the lowest costs in India compared to any other market, even if you take Asian markets. So some of this noise about per SMS being very expensive is not in congruence with what is happening in the globe.
In fact, Ashish, to put it into perspective, let's talk about the ILD prices in general in Asia. Forget about other parts of the world, right from Sri Lanka to Bangladesh to Philippines, Indonesia, Vietnam, Middle East, Russia. They are wavering. They are hovering from 6 cents to almost 20 cents. Okay, we are still at 3 cents until end of July. The Indian telcos made it to 4 cents recently. So in terms of, there is a long way to cover in terms of pricing, both domestic as well as international pricing. We are one of the lowest. Our prices are very, very low when compared to the global markets.
Sure. So the case in point then is about security. So in terms of in-app notifications versus the SMS, which one is more secure? And is there something which cannot be done by say an SMS in a foolproof manner, which maybe can be handled better by an in-app notification? Just technically, if you could help us understand.
I think it is proven that SMS is more secure, both in terms of technology and so on and so forth. So that's the reason, RBI has mandated only SMS as a channel to use for the OTPs and other notifications. It clearly says that it's a more secure channel than any other channel.
And also SMS effectively becomes a second level of security. It's not a standalone, right? So many cases the app talks to the SMS. So definitely it is more regulated. It's more secure, and there are enough instances of that being documented across the globe.
Thank you so much for the clarity. All the best.
Thank you.
Thank you. The next question is from the line of Anil Sarin from Centrum Wealth. Please go ahead.
Hi, good evening, everybody. I wanted some clarity that this technology upgradation that has been done, how much money has been spent on that? Again, on the rest of the year, is there more money to be spent on technology upgradation? That is part one of my question. The second part is, in continuation to the earlier, the earlier person, is that despite this setback for the full year, if you can give a rough, estimate of revenue growth, there are few pressures and pulls in terms of some disruptive pricing by somebody, the ILD tailwind going away, new clients getting added. So it is quite a complex thing. But like most IT services companies, they like to give out, whatever revenue guidance. So we would really appreciate if you can give us some revenue guidance, taking into account all the pluses and the minuses that you are currently seeing. So these are the two questions that I have.
Anil, Uday here. Anil, I think we made it very clear a number of times we don't give the guidance. That's number one. But having said that, I made it very clear today. We went back to almost 16% levels in terms of EBITDA, but we should get back to operating at the levels around 20% in the next couple of quarters. So we are pretty confident we will come back to the 20% EBITDA margins in the next couple of quarters.
So for the full year, it will be 20, or you will recover to that level in the coming 2 quarters, or for the full year, if you close the year fiscal 23, that would be total EBITDA margin would be 20%.
So, sorry, Anil, I lost in between. Can you please repeat?
So my question was, will it be for the full year when we close the books of account for this financial year 23, it will be 20% margin, or it is 16 this quarter, then improving, and ultimately reaching 20%? Which of the two will it be?
I'm not confirming either, Anil. All I said was we were operating at more than 20% for the last 6 quarters. Our priority is to get back to 20% as soon as possible. We have very, very clear strategy. We have a lot to leverage, and we have seen the traction in the Q2 itself. So I think our top priority is to go back to 20% as soon as possible. Okay, so I don't want really. I'm not saying that we're going to go back in the Q2 itself, but in the next 2 quarters, we are definitely going to reach 20%. So that's our top first target. Once you reach 20%, then we'll see how it goes from there.
Okay. And on a related note, any update you can give us about Wisely post the 2 names that you had shared with us in terms of Vodafone and Truecaller? Any further update? Because the thinking that we have is that as Wisely gathers momentum, naturally the margins would go up.
Absolutely, Anil. Absolutely. I completely agree with you. So the Truecaller, as I mentioned as part of my speech, we went, the beta launch was very, very successful. We went commercially live in Q2. All I can say is it's doing phenomenally well. It has really surprised all of us, and Truecaller team and our teams are working very, very closely to take this Truecaller and Wisely to the next level. I think we are pretty happy on the Truecaller relationship. That's the number one. Number two, in terms of Wisely, the VIL network deployment, It got delayed a little bit because it's a very complex product. It's a gigantic product. It has to integrate at different levels. It got a bit delayed, though it went live. Still, the bit of integration is still pending. So we have started clocking the revenues in the Q1 itself, but we were expecting the momentum in Q2. So to be honest with you, I'm pretty happy about Wisely journey so far.
Okay, one further.
This will definitely add to the better margin in total.
Okay, great. Just as a follow-on, there was a note brought out by a broking firm, I think HDFC Securities, where they have mentioned that the market size, the total addressable market for Wisely is 1 to 2 billion, basically in Indian rupee terms, 100 to 200 crores. Now, I surely think that is it is a typo, or is that the market size that one is looking at for Wisely?
Anil, I don't think HDFC said what you're referring to. I don't think they have mentioned 200 crores is the market, the TAM for Wisely. I don't think they mentioned that, unless until I missed out the point, which is not true. So the total, if the CPaaS is 100 billion, which is 10,000 crores market TAM is in India alone. So the total, the 10,000 crores itself is a TAM for Wisely, the way I would like to look at. So it's not only just 200 crores. It is complete. The complete market is a TAM for Wisely.
Okay. Then thanks for the clarification. Just one point that what was spent on the tech upgradation, and is it everything has been captured in the first quarter or more to come in the coming quarters?
So, Anil, what happens is we continue to augment our platforms because whenever we see we closely monitor our efficiencies of our platforms. So probably at a 60%, we always augment our platforms. What happened this time was our volumes have gone through the roof in the Q4, and by the time we could able to augment our Carex platforms, it took a little longer than what we expected to source software and hardware from outside India. That's where it completely derailed. But that was fixed then and there. So you asked what is the investment that we made. I think around 15 to 20 crores, which is already capitalized in Q1. But that's a big investment for Carex has now got a new platform. It's pretty stable and it's holding well. So our customers are extremely happy with the new platform. So it's a continuous vertical. We don't need to keep investing. It's one-off expenses, Anil.
Okay. So thanks so much. But just one last thing about that. Is it capitalized or is it expensed during the first quarter?
It's capitalized, Anil.
Capitalized, but Anil, the impact for the quarter is also because some of the disruptions that we had when we had those issues while upgrading, that flows into GM. Some of the operational cost flows into GM, but the big capex investment flows into depreciation, right? So it's a combination of multiple line items there.
Okay. So the gross margin decline that the enterprise business has seen from 23% to 17%, that contains both the impact of this software upgrade platform strengthening as well as that disruptive action taken by competition. Both of them are there.
Yes.
Okay. And so part of it will not recur. The second part is obviously that is subject to how the market evolves. Okay. Thank you so much and all the very best.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit a question to 2 per participant. If time permits, you may join the queue for any follow-ups. Thank you. We have the next question from the line of Miraj Shah from Dalal & Broacha. Also, participants, please press star and 1 if you wish to ask a question. Thank you.
Thank you for taking my question. My question, sir, is regarding in the beginning of the call, you mentioned that there was a one-time one-off client impact, and you expect to recoup this revenue loss. So you're expecting to recoup this from the same customer or from new customer addition?
Couple of things, Uday here. Couple of things. The way Deepak explained earlier is one, from the same customer, we have one, the WhatsApp business. In fact, the CMD went on live, and they have mentioned that they're going to go live on the WhatsApp, and we are the one who's going to provide the solutions and software and services to this largest bank. So I think for the time being, though we lost a bit of margin and revenues, and we're pretty confident that we're going to recover the revenues and margins from the same bank through different services. That's what Deepak has mentioned.
Right. And sir, related to that, the question was that are the switching costs so low pertaining to this business? Because as far as we remember, in the earlier conference calls, you had mentioned that switching costs are extremely high in this business.
So 2 points there, right? So even if you look at, their switching costs are high here. So in a sense that even in this case, we continue to be a vendor, partner to the customer here, right? Although we've just chosen to scale down volumes. So this is an industry which operates with a multi-vendor approach, and to that extent, there is always switch once you integrate, right? So we continue to be with the customer, although we have lower volume. So it's not that we are out of any customer. So that way, once you're integrated, but the volume split across the multiple partners can fluctuate between, at times. Deepak, do you want to add anything more on this?
No, Arvind, you covered it. So there are always 2 to 3 vendors with any large customer, and it just so happened that one of the vendors just decided to go very, very low on the prices to gain a larger share from that particular customer.
Ashish, let's be clear that we not lost this customer. We have been serving this customer, but we have decided not to service at the levels that they want us to service. So we are still getting the traffic, but we're not happy with the current commercials.
Sure. Thank you so much, and best of luck for the future.
Thank you.
Thank you. We have the next question from the line of Amita Chandra from HDFC Securities. Please go ahead.
Hi sir, and thanks for the opportunity. So my first question is on the margin decline. So apart from the cross currency headwind that we have mentioned, so if you can give more clarity on what was the margin impact in the enterprise business, especially from the ILD and the NLD front. So most of the impact, as you said, is from one large customer that is mostly ILD. So are we seeing some pricing pressure in other pockets also apart from that large customer in the enterprise business? And also, as you're saying that we will actually normalize to 20% in the next 2 quarters. So is it also having some seasonality impact, because the quarter 2, quarter 3 generally is a strong quarter. So is it because of seasonality, or is it also because we are not seeing any pricing pressure in other accounts? So if you can provide some clarity on that, it would be great. And secondly, on the platform business, we have seen that the platform business gross margins have been mostly maintained. So can we see similar pricing war or some similar pricing pressure on the platform business as well, and there the margins can decline? Because in terms of competition, they have also acquired a company which is into DLT, and they're also planning to launch something there. So if you can throw some light there.
Yeah. So, maybe let me start answering your first question, right? So your question is whether the impact was very topical specific or much more broad-based. The impact of the customer in discussion is on the NLD and not on the ILD, just for getting that clarity on, right? So it's not. So that was more specific, and that is one of the reasons. In ILD, there are always pockets, but, that is getting addressed, more as business as usual. And Uday kind of mentioned about it, that we are actually on a path of increasing prices in ILD in Q2 to drive our profitability. So that is definitely another variable which is baked in to our assessment, right? So I would say that from the journey standpoint, there are 2-3 things. One is there are one-timers that we are trying to offset. Some of them will be a little immediate. Some of them may take a couple of quarters. 2 is a lot of our new initiatives, new business will also kick in, which will help drive profitability, right? So there are multiple factors in play. It would be difficult to, peel out individual factors, but collectively we have enough tools and plans in terms of how to get back there. So it's not just blind seasonality, because the drop here was not fully seasonality, right? So to that extent, that's how we are seeing it.
Yeah, in terms of platforms, I think the DLT is a consortium between Tanla, IBM, and Tech Mahindra. They have deployed, IBM and Tech Mahindra is deployed with other telcos, and we deployed with most of the telcos. And so we don't see any challenge out there. In fact, we see absolutely no challenge out there.
Okay. And on the Wisely platform, so as the previous participant was mentioning, just to provide clarification, so the 1 to 2 billion that I mentioned in the report was specifically for the revenue potential for the Wisely platform. It was not the TAM, right? So in terms of the revenue potential, what we are assessing is it can be another 100 to 200 crores. So what is going to drive that, and is it the deals that we have won? Those deals are having the potential to scale it to that level, or we will have to win more, or it has to be more broad-based, or it will take much more time to scale to those levels. So if you can provide in terms of roadmap, how you're seeing the Wisely roadmap over the next 1 year.
Yeah. Amit, I completely agree with you in the sense as we speak, the market is around 45 billion, including government, per month. The transactions SMS per month, and the 45 billion is a TAM for Wisely. And as we speak, we are hovering around 2 billion. So there is a huge potential to grow. Out of 45 billion, including government, we have just onboarded only 2 billion. There's a long way to cover. So there's huge potential for Wisely platform. Yes, once the enterprises and the telcos see the value in Wisely, it is pretty easy to scale the volume.
Okay. Okay, sir. Thanks and all the best.
Yeah. Thanks, Amit.
Thank you. The next question is on the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Yeah, hi. Thanks for the opportunity. I have 3 questions. First question is regarding the gross margin for the enterprises. If you can provide the bridge, because it's a fairly sharp jump. You have attributed 2 to 3 reasons for the 600 basis point. So which factor contributed how much fall in the gross margin? That will be useful. And also, for that particular customer, if you can tell us, even the ballpark range of revenue which was impacted because of that, that would be useful, because the difference in the margin is pretty high, just to understand the scale of it. My second question is regarding the platform business. How, that seems to be, sort of stagnating, considering given Wisely rollout and, inherent quality of the business. There was an expectation that growth will, be much stronger and much certain. So how should we see this going forward? And my last question is, there was some base effect into the the pricing increase in the previous quarter. So if you can comment on how we are seeing the volume growth on a YOY basis in the current season? This is for enterprise business. These are my 3 questions. Thank you.
So, to your first question, just in terms of, right, we talked about Forex being about 1%, right, which is the impact on the EBITDA side. We have a specific impact on the overall impact is about 4.5 at EBITDA. The balance 3.5 split between, the platform modernization piece, maybe around 1%, and the balance will be in terms of the customer specific one, right? So I don't want to give an individual size of a customer, but they were one of our top 5 customers, Pranav. So,
Sure.
You have the metrics.
Sure.
That will kind of give you a sense of that impact. That was your first question, right? Your second question was in terms of the platform. See, as Uday kind of mentioned, right, platform business is not operates at a slightly different momentum, right? So you roll out a platform, it takes some time to stabilize. Just to give you a sense, TrueBlock is probably one of the most profitable platforms in the world today, right? But probably from the time it was launched to the time you started scaling its full potential was about 12 to 18 months, right? So, it is not a business which you will see movement in a slope kind of way. It will be more like a step kind of way, right? So you've seen us launch multiple aspects of our platform. So the building blocks are in, right? So we talked about Truecaller scaling up in Q2. We talked about VI scaling up in Q2. So as these happen, you will suddenly see a bump up till the next platform kind of gets commercialized and scaled. So you will have to look at this business with a little more patience because it's much more profitable, but it takes a little more time because obviously the integrations are deeper, it's more embedded in the customer ecosystem, so they're more complex. So that's really how you should read it. So the potential is high.
Sure.
And it takes some time, but and that's why we keep giving you these updates in terms of what we are doing. It's not static. Now, now what has happened is we've got a momentum built in terms of our rollout. So you have seen something come in from BI, you will see something come in from Truecaller. By the time these stabilize, something will come in from Core.ai, and then we will keep adding to it. And after a point of time, you will find that there is some product kicking in every quarter, but we've not reached that rhythm yet, Pranav. So you will have to be patient on that, but all the building blocks are doing very, very well, and I think we will scale well on that.
Sure.
So on your third question, right, I want to clarify one point that, when we look at our YOY growth is not driven by ILD, right? It's driven, in fact, the rest of the businesses have actually grown faster even in the enterprise business. So to kind of attribute pricing as a reason for YOY growth is probably mistaken, right? So, this business, if you look at last year, we had similar questions where, there is seasonality, where numbers are a little horizontal between Q2, Q3, Q4, and that's the kind of trend that we've seen over the past 2 years. So I think that is how this momentum is in the business, and that's how we are going to kind of track it. We've talked about increasing prices in ILD in Q2. So we will have to build and execute on that, on the opportunities we have, and that is what is giving us some amount of confidence in terms of how we are looking at rest of the year.
Sure. Thank you. That's it from my side.
Thank you. The next question is from the line of Deepak Chopani as an individual investor. Please go ahead.
Hello, sir. I've got 2 questions. What are the key levers to push international business? Is it just the technology wisely, along with the various partnerships you are entering, or will it be some kind of cost advantage? So that's number 1. Number 2 is any idea when voice DLT could be launched by the regulator?
Voice DLT. 2 questions. Deepak, Uday here. So when the TCCPR 2008 came sometime in June, the regulation covers both SMS and voice. So this platform is built for both SMS and voice, and as we speak, the operators went live only in SMS.
but our platform is ready with even voice capabilities. So whenever the telcos and regulator decided to launch voice services, we are up for game. So that's number two. What was the first question?
Whether Wisely is a cost play or a different technology. What will make us succeed in the global?
So, Deepak, let me take a shot and Uday can add on that. So clearly it's a technology play, right? It's a differentiation play. It's a value proposition play, right? It's not a cost play because it's not a low cost platform, right? Value proposition is around the features of Wisely. It is not around it being cheaper because the basic telco costs anyway are what they are in different markets. That per se is not a differentiation. I think what we are trying to do with Wisely is a little different. It is about being a single, a platform of platforms for digital interaction, a one-stop shop for any customer, with trust, with blockchain, with all of those capabilities built in, and that's really what is resonating with customers. Uday talked about how Wisely Insights was received, and you have multiple people from who's who from a global tech major perspective, right? Giants coming and interacting with us on the kind of output that Wisely throws, and that's really the differentiation. And they are all looking at it, not India specific, but on a global basis. So we will have to execute and build on those conversations, but clearly it's not a cost play, it's a differentiation play.
Okay, got it. Thank you so much.
Thanks, Deepak.
Thank you. The next question is on the line of Amit Mishra as an individual investor. Please go ahead.
Hello.
Yes, Amit. Good afternoon.
You're audible. Please go ahead.
Good afternoon. Thank you for giving me an opportunity to ask questions. So firstly, congrats on yet another quarter with healthy year-on-year growth. But at the same time, we saw loss in wallet share from big clients and big margin erosion as well. So it's quite disturbing when we had the guidance in previous quarter to increase and able to maintain the margins. And I don't generally talk about stock price, but you must have seen how stock was beaten today. And this comes from the background of big correction in last one and a half month. So it's a high concern for us if there are any other factors at play, because the result was not so bad despite the margin erosion. So I want to hear your thoughts on that. Second question, I want to check with you about the global GTM and what's the time frame we are talking, because we discussed this thing in last October when we hired one of the biggest consulting firm for the GTM strategy. Now it's 8 months, and VI has been in operations for last 3 months, and we must be interfacing with them for the last 6 months. So it's just to check what sort of time frame they're taking, because things keep on shifting. So I would like to hear your thoughts.
Sorry, Mr. Mishra, your voice is breaking now.
So you want me to repeat the second question or from the start?
No, just a minute.
Yeah. Just the second question, Amit. We heard your first question. Just second question, last leg. Yeah.
Yeah. So on the second question I talked about the time we have taken with this consulting firm, and it's since October, November last year, so it's 8-9 months. And with VI, we have been doing this interfacing for last 5-6 months, and we have been operational for last 3 months. So we were talking about case studies. Now we should have it. So we want to hear something, tangible, and so that we can see and we can anticipate things. What we are doing in this regard. So if you can answer these two, and then I can ask more if there is still time. Yeah.
So Amit, Uday here. Okay, and
yeah.
All I can say is I don't invest in any stock, so I cannot really really comment on the stock movement.
The biggest investor in Tanla.
Yeah, absolutely. I'm talking about other than Tanla. Like, I don't invest, right?
Yeah,
anyway,
that's right.
my point is very simple, right? What you need to appreciate, all of the investors, like what you really need to appreciate is we have back to back. We have closed 3 largest partnerships in the last 9 months. The first one is VL. We have a huge competition. We hands down. We won that contract on the purely on the merit basis, not on any other basis. And it's a long-term deal. Once you kickstart revenues and the margins, it's a very, very long-term deal. In fact, let me step back now. I know when we deployed our platforms with some of the telcos in India, probably more than 1 decade. Once we deploy the platforms, that will go for a long, long time. Okay, we don't deploy the platform for 6 months or 1 or 2 years, like. So winning the VL is not easy. Hands down, we won the deal. We have been deploying. We are facing a bit of challenges because there are too many integration points with the VL. Because Vodafone and Idea came together, there are a lot of network components are there, a lot of moving parts are there. So it is gone live. It is not fully gone live, but once it fully go live, it's a long-term deal. That's number 1, right? Number 2, in Truecaller, they're a pretty large company from Stockholm. They have more than 300 million users. A pretty large company, right? So they're available only Wisely. Okay, it is not that like each and every player in India or global have access to the Truecaller. It is exclusively available on Wisely, right? That's number 2. Number 3, we have closed a Core.ai partnership, again exclusive for 6 markets. There, one can go and read the Gartner quadrant report. They are the top end quadrant. They are the market leaders, as informed to the market. They have deployed a couple of largest deployments on the planet. If I'm allowed to say, in fact, it is available on there in the public domain. They deployed with the biggest banks in the world, including the Citibank. So it is again available only with us, only on Wisely. So it demonstrates the power of Wisely. Okay, one cannot doubt even for 1 second. That's the first point, right? The second point is coming back to the consulting firm. Yes, they have been working with us. With their help, we have closed 3 largest deals. It takes a bit of time. It's not that like you close the deal and generate the revenues from next day. That's not possible. We are extremely happy with the arrangement that we have with this consulting firm. It is working well for us. We're extremely happy about it, and in fact, we are fully fired up. Yes, we are, I think, being penalized today, but I don't want to really comment on that. But we are fully geared up. We are fully geared up. Our strategy is working. We know we are fully fired up, and we are going to get back to 20% EBITDA margins as soon as possible. So we are fully geared up for that.
Sir, just one question on VI. How much of migration has happened for the Idea traffic?
So in terms of it's not question of traffic, like it is fully diverted in terms of traffic, but unless until we fully integrate, the 100% traffic doesn't come to us. It may go to other telcos from there. It may go somewhere. There's a lot of leakage in the market. One of the biggest advantages with our firewall is 100% of the legitimate traffic has to come to VL consumers. That's the reason VL has chose to deploy Wisely deployment with them. So I cannot really talk in terms of percentages, but we are more or less there. And the next probably 2 weeks, we should be able to complete our integration with VL network.
Sir, on the GTM for global markets, I didn't get the answer. What time frame we are looking at?
Amit, like see, when the strategy works for India, the strategy works for the global market, right? Nowadays, like once Wisely is available on the cloud, okay, For me to launch the services outside India, it's a matter of 2 days. Okay, I don't need to go and deploy the platform in those countries. I just need to I need to set up the cloud and the global market, and everything is switched on the next 2 days. So it's not in terms of platform deployment. It's pretty easy because this Wisely is completely developed on the cloud. That's number one. Number two, in terms of GTM, once it is working with the Indian market, it is pretty easy to replicate in the global market. So we're not in a great hurry to expand just for the sake of it. We're not that kind of company. We want to be very, very cautious about our expansion plans. India itself is a big market for Wisely. As I told you earlier, 40 to 45 billion messages per month, and we are handling only less than 2 billion messages. So there is long ground to cover in India itself. So expanding the global market is not an issue. It's a question of a time before we see the success, and that will help us to expand.
Thank you. Our next question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Hello.
Hey, good evening.
Yes, Deepak, please go ahead.
Good evening. Thank you very much, sir, for the opportunity. Sir, I just wanted to understand, till last quarter we have been committed to the rule of 60, right? And now with the current market condition changes and the margin pressure also that we are seeing. So what sort of rule we are committed to as we speak now?
Deepak, that's a good question. In fact, I was pretty vocal on the CNBC also when I was there on last time. So this rule of 40. That's where most of the SaaS companies, successful SaaS companies, do operate at rule of 40. But we have been operating at almost 59 to 60% last year. Our intent is to operate at 60. But we had a bit of a headwinds in Q1. We're not going to shy away. Our target is to go back to our targets. So I cannot really comment right now, but we are very cautious about rule of 40 and 60.
Okay, so our target is to go back to rule of 60, right? That's what you're saying.
Absolutely. So all I said was if you look at Deepak, if you look at the biggest SaaS companies in the world, okay, they operate at rule of 40, okay, right? But we have been operating at better levels. We crossed 40, then we crossed 50, then we always got close to rule of 60. So definitely, since we are going to be the platform company, definitely we are very cautious about rule of 40. And we would like to stick to that. Our intent is to stick to rule of 40, though we are operating at 60, rule of 60. So I'm not giving you any guidance whether it is rule of 40 or 60, but we are very cautious about rule of 40 and 60.
Okay, I understood. Yeah, I think that's it from my side. All the very best.
Thank you.
Thank you so much.
Thank you. Ladies and gentlemen, due to paucity of time, that would be our last question for today. I now hand the conference over to Ms. Ritu Mehta for closing comments. Thank you, and over to you.
Thank you, everyone. That was the last question for today. In case we couldn't take your questions due to time constraints, please feel to reach out to Investor Relations team. Have a good evening.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Tanla Platforms Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.